Welcome back to Conflict of Interest, and I'd like to introduce our guest. I'm not sure whether I can get through this correctly, but he's a relative of Greg Barnes.
He is. That's my disclaimer.
And his name is
Daniel Liptak.
Daniel Liptak from Hatfield Liptak Advisors, and he is an Australian hedge fund expert.
That's very good, Peter. For someone who's economically illiterate like you.
I've got no idea what I've just said.
No, well, you don't.
What is a hedge fund? You put your money in the hedge or something?
What are Daniel, before we get on to that, hedge funds have been blamed for a lot of the current
Can we just tell
malaise.
everyone,
What is a hedge
including
fund?
me, what the
What
hell
is
it
a hedge fund?
Okay, I think we have a general perception what a hedge fund is, and I think what reality
You
is.
tell them what's the general perception?
know.
I think general perception is it's everything that's going wrong in the market is the cause of a hedge fund.
Now, what is a hedge fund?
But what is a hedge fund?
Okay, a hedge fund.
It's not like a hedgehog, it's different.
Can be.
It can be, yeah.
Yeah, prickly.
No, I think a good definition of a hedge fund is as a fund manager who has a full kit of financial tools that are at their disposal to be able to make money when the markets are going up or down.
Oh, okay, so they're betting against it going up or betting against going down?
Yeah, look,
Is that what hedging means?
well, yeah, look, that is the correct definition.
Of course. I mean,
Yeah.
would you expect me to give anything other than a correct economic definition?
Honestly, let's talk about
failed
something.
economics
You
in
now know what a
year
hedge
12.
fund is. You now know what a hedge fund
I
is.
was the one that gave the correct definition. I think
You
that's
did. It was
pretty
very good, Peter. You've understood it
I think I'll
quickly.
shut up from now on. Go on.
The US bailout package, I think you call it a rescue package. One, is it enough? Two, where's the US heading over the next 12 months? And three, what does that mean for Australia?
Right. Yeah. No, I think it's better to be called a rescue package rather than a bailout. Bailout sounds like it's $700 billion just being thrown out the window and for the benefit.
Well, has it been? Will they recover the $700 billion?
Look, there's a good chance they'll recover some of it, all of it, or more of it.
Oh, okay. So it's not... All right. I rather thought, yes, that the money would be
Taxpayers' money being squandered.
just gone.
Yeah. Look, they're buying assets that are perhaps worth, say, 35 cents, 40 cents in the dollar, which, if they were held to maturity, may end up being worth 100 cents in the dollar.
Okay.
So, look, it's the current valuations that have fallen away because there's nobody in the market wanting to buy these assets. So, without that,
what we're talking about here, Dan, we're talking about mortgages. So we're talking about housing, essentially.
Mainly
around
domestic
the US.
housing.
Domestic housing.
credit cards,
Yep.
bank loans, the whole, any type of loan that you can
The
think.
sort of thing that banks do.
Well, yeah, student loans. Student loans are huge in the US, of course.
Yeah.
I think one of the best descriptions of some of the mortgage practices, though, have been that in the previous couple of years, 2004 to 2007, there were loans being made out to unemployed people and singlets on the side of the road by your insurance, the mortgage sales guy, just
signing
the money
people
out.
up.
yeah, no care, no
Now
responsibility.
that's the sort of capitalism I like.
It's just sort of naked greed.
Yes.
And
Literally.
Selling money on the side of the road. Why wouldn't it?
And the best bit about that is that you call them mortgages, we call them mortgages, but the definition of what a mortgage is or how they work mortgages in the States is very different to here.
Okay.
And I think this will also start addressing some of the questions about how it will affect Australia. The mortgages in the US, as it transpires, don't have too much of a problem with recourse. There's no recourse on the loans. So if you borrow,
So that's right. If you borrow money in the US, as I understand it, if you borrow money in the US and you decide not to pay it back and just walk out, there's nothing the bank can do. Correct?
that's
Other than
right.
sell your
So
house.
Can't they sell your house?
they can sell
They
your
can sell your
house.
house. That's it. But they can't come after you.
Yeah, so if you buy a house for $100
okay.
with a $100 loan, you are responsible to give them $100 back or the value of the house.
Oh, okay.
So if the house goes down to $90, that's $10 walk
And you just walk out. That's why people
walk
are
out.
walking out of their homes.
Yeah.
That's called jingle mail.
Well, it's a good
Called
system.
what?
Jingle mail.
Jingle mail. Now, what does that mean? But in the context of Australia, Peter raised earlier the issue of Australian banks. Australian banks are pretty solid. We don't want to get a run on the market for all our viewers, but Australian banks are much more solid and have, are they, compared, say, with some of the US banks?
Well, look, I think one of the first important things that we can differentiate ourselves with is that the mortgages that typically are made in Australia, there is a recourse.
And they're sound and secure, basically.
Well,
we haven't got the junk mortgages that they've got.
That's right. The junk mortgages are stuff that is really clogging up the system, that are causing buyers to stay away from the CDO space.
But let me make this point. What little I know, it doesn't seem to me that we're going to go down in this country for the same reasons that the Americans went down, because we don't have the problems in their systemic problems. But the reason we're going to be in trouble is the backwash, isn't it?
Correct. The shockwave will go around the world. Now, how much it will affect us, it's up to a guesstimate. Will we go into recession? I guess. But we will have higher cost of funding.
Well, there's been a bank or two collapse in England. Well, if they collapse there, why wouldn't they collapse here? We're pretty close to the English economy.
I think the English economy is also much closely linked to the US economy. There is a lot of the banks
more than us.
Yes. I used to work for a US bank, a Wall Street bank in London. A huge employer. So the large Wall Street banks are up and down.
So there's much more American money penetration in the UK than it is here.
Oh, yeah.
We've seen in the past 20 years the rise of and in fact I think Tom Wolfe in Bonfire of the Vanity satirised, the rich investment bankers, and in fact in Australia, a lot of the investment banking industry has been huge.
Well, the
in the last
merchant
20 years.
banks.
The so-called merchant
We've
banks.
got one as the next Prime Minister.
We've got what?
We've got Malcolm Turnbull.
That's right, who's ex-Goldman Sachs, your old bank. But are we going to see, as I understand what's happening in the US, that sort of style of banking is going out the window. These banks are trying to now become more sort of plain vanilla conservative banks, correct?
Deposit takers, absolutely. Yeah. Goldman Sachs is a great example. Perfect trade. They're now going to need to de-risk. Again,
so are we going to see Goldman Sachs setting up mum and dad branches around America?
I don't think so.
You're not going to see that happen?
No. Look, they will take deposits, but they will be from their high net worths.
Yeah.
People like you, Peter, who've got a lot of money.
Yeah, I've got tons of money. That's why I'm here working with you.
Daniel, in terms of the Australian economy, I know you're not an expert in climate change. Who is an expert in climate change? I mean, it's difficult. But we did talk a little earlier about whether or not, the government's plans.
Can we afford it?
Can we afford a carbon abatement scheme?
Look, I think we're going to find that the cost of funds are going to be much higher tomorrow, and they're going to be much higher going into the future, regardless of whether or not we have.
So this is government borrowing. It's going to cost them more.
Well, government borrowing, corporate borrowing, and private borrowing are going to cost more.
Well, that's going to slow the economy down somewhat.
It's going to slow the economy.
Reduce profits.
Yeah, exactly.
Reduce the amount of revenue the governments are getting, won't it?
Yeah, well, you'd expect that.
Well, I just can't really fit it in how we're going to have a new tax, the carbon tax, which is designed, depending upon your view, either to punish industry or at least make industry pay for its dirty practices. I mean, it just seems the wrong time.
There are some opportunities in the carbon trading sphere. So there are opportunities to make money, and I think that's always got to be remembered, that people will be able to make money in the carbon trading schemes. There are people.
I thought the point of it was to save the planet. Or have I got it wrong?
Well, and make a buck on the way through.
Oh, okay.
There's always you like capitalism. There's always an opportunity to make a buck. We're going to wrap up this first segment. We're going to keep you here though, because I want to talk to you in the second half about whether or not in Australia we've got 9 out of 10 trading partners are now going into recession. We want to talk about that. But secondly, also, I think we should talk about the Australian stock market, because so many Australians, most of our viewers, have money in the market, and this is a real political problem for the government because it's been going up for the last 10, 15 years.
You got shares?
And I've got shares.
You got shares?
You got shares?
No, not
You got
mine.
shares?
Never
You're the only one without a conflict of interest.
Never owned a share.
So when we come back, we'll continue with Daniel Liptak, and we'll keep looking at the global financial meltdown.